Hey, TIG here. Thanks for being a part of my learning journey. What is ROIC? It is the rate of return that a business makes on the cash that invests in itself every year. Let me give you an example. You want to start up a burger joint and it's going to cost you $500 to get up and running. Your invested capital is $500. After your first week frying up burgers, you've made yourself $800. Removing expenses of $300 that you paid for supplies, marketing, and salaries, you are left with a profit of $500. The ROIC is the profit divided by your invested capital, so $500 divided by $500 is 100%. Not bad after the first week. How is it useful? It is a measure of how effectively a company uses its money, whether it's been borrowed or owned, into its operations. It is also an indicator of how effective the company's management team is at using the money invested into its operations. You need to establish the 10-year, 5-year, and 1-year. Why? Because when you look at the 5-year and 1-year figures and you compare that to the 10-year figure, it gives you an indication if the company is slowing down or not. How do you calculate it? Now, the beauty about it is that you hardly have to. Now, using the two following websites is where I get my information from, and I'll show you how you can add this into an Excel spreadsheet. Okay, so we're going to head into Morningstar here, type in Columbia Sportswear Company, COLM, head over to the operating performance, and then we'll see the return on investment capital, the percentage growth rate. So let's just take a spreadsheet and let's name it from year 1 to year 10, and we'll input all the data starting with 2021 being year 1. So let's go through all that. So then year 1 is going to be what you see, the 15.26. And then to get the 5-year average, we select the first 5 years and we put in the average. And we're going to do the same for the 10-year average. Select all 10 and you get automatically the average. And then you input all that there. Now, one of the other systems I use is called TradingView. So again, you can select Columbia Sportswear. And you'll go down to the financials section and select the statistics and scroll down a little bit and you see the return on investment capital. However, there you only have 7 years of data. You do not have the full 10-year average. That is why I prefer the Morningstar over the TradingView for some statistics. So those are my two programs that I actually use to get the information for the stocks that I'm looking into. That's TradingView and Morningstar. Both are not a sponsor yet. If a business doesn't have a healthy ROIC, ROIC, equal to or greater than 10% per year on average for the last 10 years, move on to another business. We shouldn't see the ROIC going down. It should be going up or at least remain steady. And that's it. I hope you found some value in this video. If you did, hit that thumbs up button. If you feel like it, subscribe, and I'll see you soon for another video. Cheers.